Hello, my name is Steve Bigelow with the Candlestick Forum. We know we're in a downtrend, so we're not going to concentrate so much on the sectors from the beginning. What we want to illustrate is one very important truism about candlestick analysis. And this is what has made me a tremendous amount of money. And I say that with great exhilaration because prior to candlesticks, I was one of the worst investors in the world. And then when I started seeing what the probability factors were of the candlestick signals and the T line, my profitability expanded dramatically, going from one of the worst investors in the world to where I am now consistently pulling money out of the markets just based upon one simple factor. The candlestick signals are a definite high probability illustration of what is occurring in investor sentiment. The T-line truism, a candlestick sell signal and a close below the T-line. This word right here is what you want to concentrate on. There's an extremely high probability a downtrend is being confirmed. Same scenario on the bullish side. A candlestick buy signal and a close above the T-line, you have an extremely high probability an uptrend is in progress. So why do I point this out? Because as soon as we started seeing candlestick sell signals in the indexes, especially up here in the overbought condition, that got rid of your, I'd say should get rid of your, and it got rid of my hope or enthusiasm that there was still more upside. These signals are telling you what is exactly going on in investor sentiment, and the fact that they're closing below the T-line gives you extremely high probabilities that you're now in a bearish trend. Always the rhetorical question. Do we always anticipate a big down move like this, or what's occurring right now? Definitely not, but we don't have to worry about it. We know that we're in a right direction until we see a candlestick buy signal. You can put that same analysis when you're looking at the NASDAQ. A bearish engulfing signal and close below the T-line. Do you catch moves like this? You're going to put yourself in situations that once you see the probability factors that they're not closing above the T-line, you stay short. You don't know how big these moves are going to be, but fortunately you're in the right place at the right time. So there are sectors right now that can still be shorted. The shipping stocks are ones that you can be shorting, and the metals are also ones that you can be shorting. But here's what we want to illustrate is you want to start shorting things that are just rolling over. We get constant questions of should we be shorting situations like this. Yes, there's times where you can see that even if you're in a downtrend, there's more beneficial times to be shorting, like in a dumpling top. What was the T-line telling us? That as long as you were below the T-line, the bearish sentiment was in control. So we always get questions, is it time to short a chart like this? Well, obviously the time to short was up here, but you can see what type of pattern we're going into. Kind of a wave one, wave two, your shooting star, failure at the T-line, gap down. Roku could have more downside in sympathy with Netflix. What are the different strategies? This is what the candlestick signals allow you to activate. Maybe I'm not shorting the stock. Maybe I'm not buying the puts. But maybe at these levels, in the oversold area with the prospect of more downside, that's where you start putting on put spreads where your exposure is not as great. And if the price moves, your percentage move is still extremely high. So these little patterns right here is what a candlestick investor can recognize, because when we were shorting the home improvement stocks last week. As you can see, this was already down pretty strong, but this little bearish J-hook pattern told us we probably had more downside. So the home improvement stocks, where we can see these patterns, we could kind of calculate where our targets were going to be, and then see change our game plan or revitalize our game plan once we get to those targets. So right now, with the Dow continuing to trade lower, you still want to stay short. Now, is there signs that it's time to look for covering short positions? Well, you can see you've gotten into the oversold area and you're a good distance away from the T-line. So remember, the fundamentals of the markets did not change. The perception of the fundamentals or the investor sentiment is what changed, and that's what's clearly illustrated in the candlestick charts. That'll be it. We'll see you in the chat rooms.